ICT's Judas Swing Strategy is probably the easiest strategy you can use to pass your funding challenge and start generating consistent profits in the market. In today's video, I'll be fully breaking down and simplifying ICT Judas Swing because a lot of people do overcomplicate this very simple strategy. I'll be going over what exactly is the Judas Swing, what pairs and times does it work on, how to actually spot the Judas Swing, and showing you guys some high probability setups. But enough of that, and let's get right into the video. So first things first, what even is the Judas Swing? The Judas Swing is a false energetic move. This false energetic move trips up reactionary traders that don't have a proper understanding of bias of the market. We enter after the reactionary traders have been stopped out and target opposing liquidity that is in harmony with the trend. Essentially what we are doing is we are waiting for the Judas Swing, which is this reactionary move right over here, that takes out the reactionary traders. Again, reactionary traders meaning traders that don't have a bias of the market. And then after, what we do is we then enter the market and target opposing liquidity, because when market takes out one side of the liquidity, what market likes to do is go for the other side of liquidity. Now, what are the times and pairs the Judas Swing works on? The Judas Swing starts at midnight for New York time and at 4 AM for GMT time, also known as UK time. And it ends at 5 AM New York time and ends at 9 AM UK time. Now, what pairs does it work on? These are the three pairs that I've seen it work on based on my own backtesting. This is SPX 500, EURUSD, and GBUSD. I really suggest you guys go do on your own backtesting and see what works best for you. But from my own personal testing, these are the three pairs that it works best on. So the first thing we do for the Judas Swing is identify market bias. Because the Judas Swing takes advantage of traders that do not have a proper understanding of market bias, we need to make sure that we have a good understanding of market bias. Again, the Judas Swing is a false energetic move that trips up reactionary traders, and these reactionary traders do not have a proper understanding of market bias. So to make sure that we are not in that category of reactionary traders, we need to make sure that we have a really good understanding of market bias. We do this by looking on bias on the 5 to 15 minute time frame. You can see right here, we have a clearly bullish trend. You can see we have a high here, low here, high, higher low, high, low, so on, so forth. Now, the next thing we do is identify liquidity. After we identify market bias, we need to identify liquidity in the market. If our market bias was bearish, we want to make sure that market takes out buy side liquidity, then short the market. If our market bias was bullish, we then want market to take out sell side liquidity and long the market. Again, you can see here a good way of identifying liquidity is looking at the Asia high, Asia low. You can look at equal highs, equal lows, but the easiest and most simple way is to simply look at the Asia high and Asia low. Now, just explaining it a little bit further so you guys can understand easier. Say right here, our market bias was bullish, okay? If our market bias was bullish, we want the market to take out sell side liquidity, then long the market. So see right here, we've taken out sell side liquidity. After we've taken sell side liquidity, we then want to long the market. Now, say our market bias beforehand was bearish, we want market to take out buy side liquidity and then short the market. Reason being, the reactionary traders have been taken out, and now we want to trade the correct move, which is the move up if we are bullish, and take out opposing liquidity. Now, when it comes to the entry criteria for the Judas Swing, it is really straightforward. The first thing we want to do is drop on the 1, 2, or 3 minute time frame and mark out our imbalance that causes the market structure shift with displacement. So after we've taken out sell side or buy side liquidity, depending on market bias, you can see right here our market bias was bullish because we are looking for sell side liquidity. What we do next is look for market structure shift. Okay, this market structure shift is essentially our confirmation that market wants to go bullish, and then we can then enter off of the imbalance right here. So we are now bullish. We've taken sell side liquidity, so we're looking for a bullish market structure shift. You can see over here we have a market structure shift, and again, entry criteria is really straightforward. If you guys are familiar with the SilverBullet, it's very similar to that. So we wait for market structure shift to take out, wait for price to take out market and give us a market structure shift with a strong displacement. Essentially, a displacement, all a displacement is a series of candles that have strong moves. So here we have our market structure shift right over here. Now, to actually enter a position, we want to mark out the 50% of the imbalance and enter there. You can use with the Fibonacci tool, just place it here and here, and you get your 50% zone. Make sure your stop loss is below or above the low / high. In this instance, our stop loss will be right here because it is below the low, or it could be right over here, it doesn't really matter. And you want to target opposing liquidity. This is exactly how a result will look. Again, this is the same example right over here. We've had sell side liquidity being taken, market structure shift, we've entered off the 50%, stop loss just below the low, and then market pushes up and we target opposing liquidity. Now, I'm going to go on to a live example, but If you're looking for hundreds of thousands worth of trading capital, completely guaranteed, make sure you go ahead and click the link below in the description. Again, we will pass your challenge completely guaranteed. If not, you get your full money back plus the challenge fee, essentially making it a zero risk investment on your end. We also offer top tier high probability signals you can use on your live funded account. These signals have roughly an 87% win rate. Not only this, but we give you the best ICT mentorship in the game. So if you are struggling to learn ICT and you need like a bit of a fast track into learning ICT and being profitable at ICT, we have a mentorship for you, hundreds of hours worth of ICT concepts simplified into a simple mentorship. But again, if you're interested, simply go in the link description below and join the Telegram. Alright, so I'm here on the live example. I'll be breaking everything down from A to Z so you guys can get a really good understanding of how exactly this works on a live example. Now, first things first, we need to understand when the Judas swing starts and when the Judas swing ends, okay? If you keep in mind the start video, I said it starts at 12 midnight and it ends at 5 New York time. Again, this is New York time. For GMT time, it is different, but this is our Judas swing time, the times that we can take a trade for Judas swing. Now, the next thing you want to do is mark out our Asian liquidity, our Asian high and low. We can do this simply by using an indicator or just looking at the time Asia session starts and ends. Here we have our Asia session high right over here, and we have an Asian session low right over here. Now, this is all good, but we actually need to identify our market bias. If you can see right here, our market bias is clearly bullish. Why? You can see market is clearly going up. Right here we have a high, low, high, 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 low, high, 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 low. Market is clearly going up. Now, after we've identified our market bias, then identified our liquidity, the next thing you want to do is wait for a buy side or sell side liquidity. Because we are in a bullish market bias, we want to wait for sell side liquidity to be taken. If I quickly play the market out, you can see sell side liquidity has been taken. After sell side liquidity is taken, what you want to do is you want to go either on a 2 minute, 3 minute or 1 minute time frame and look for a market structure shift. Again, just so you get understanding, liquidity has been taken right over here. Now, if I play the market out, what I'm looking for is a market structure shift. You can see right over here, we do have our market structure shift. Right over here. Now, we've had our market structure shift. What do we look for now? Now, the next thing we look for is an imbalance that had a strong displacement. You can see this is clearly a strong displacement with the series of candles. They are really, really strong. Now, what we want to do is we want to mark out the earliest imbalance, the most extreme fair value gap, which is right over here. Again, we mark it out. It's really, really straightforward. Let me actually label this market structure shift so you guys don't get confused. So we've had sell side, because we have a bullish bias, we need sell side liquidity to be taken. After sell side liquidity is taken, we then wait for a bullish market structure shift, as simple as that. So we've just had our bullish market structure shift. If I get the Fibonacci tool, so I can mark out the 50%. Now, what do we do is literally enter the market and target opposing liquidity. Again, opposing liquidity can be opposing order block, opposing even Asia range, opposing equal highs. Again, all you want to target is opposing liquidity. The best case in this scenario was to target the opposing Asia high right over here. Now, again, for your stop loss level, what you want to set at is right below the low. So right over here, either this low or this low, doesn't really matter. I'd recommend that you do this low because it gives you more wiggle room for the trade. Now, if I go ahead and play the market, and we can see how this trade plays out. You can see you've been entered into our trade. And take profit is literally hit within a couple hours. Again, if I play the market, I'm pretty sure you could have targeted even more. So yeah, you can see this trade was a 1 to 6 risk to reward, but you could have gone ahead and gone even a 1 to 8. If I play the market out, it might even be more. So you can see you could have gone all the way up here, targeting this high right over here. Apologies, targeting this high actually right over here. But again, the best case and best thing to do is just target lower hanging fruit, so either a high here or even the Asia high or low, depending on market bias and the liquidity that has been taken. But yeah, that's all from me. The Judas swing is literally as simple as that. A lot of people do overcomplicate it, but there's no reason to overcomplicate it. If you guys did enjoy this video, please make sure you like and comment. If you are struggling with Judas swing, feel free to leave a comment below and I'll try to help you guys out. But thank you for watching and take care.